Hello, you're watching Dukascopy TV. I'm Ben Jones. This weekend brought the World Economic Forum to a close. Some of the major topics discussed included global warming, wealth inequality, and the worsening relationship between Japan and China. Joining me on the line to discuss some of the financial economic headlines from the event is Dr. Devendra Pant from India Ratings and Research. So, Dr. Pant, going into the 2014 forum, there was a focus on looking ahead, a contrast to the past few events where the focus has been fixing the damage from the financial crisis. This looking ahead is down to a few developed economies slowly getting back on their feet, and it's thought that many major central banks will be undertaking big changes to their monetary policy throughout the year. But do you agree with this optimistic approach, or do you think it's possibly premature?
Well, the answer is somewhere in between. It's neither premature nor too optimistic about it. Look, how the things have unfolded. If we look, the whole financial crisis started from the U.S. U.S. is still struggling with it. It gave a massive stimulus in the form of quantitative easing, and now we are talking about the withdrawal of quantitative easing. If we look at month on month, the kind of employment numbers and other numbers coming from the U.S., 1 month it gives an indication that the things are improving, and then the other next month number will give an impression that things have not matured or improved to the extent that it will call for immediately quantitative easing. However, the Fed has started some amount of quantitative easing. When it first talked about it, the quantitative easing, the entire emerging market collapsed. So there was issues with how fast it will take place. Looking at what is happening in Europe, the Europe 2 years consecutively has subpar the contraction, and it's only now we are seeing some sort of positive to very low level of growth. However, the problems with Europe have not yet finished. They are still struggling with it. Overall, the ECB is trying to contain the crisis, or trying to maintain it a very low, stable phase of growth. However, the things are not exactly the way one will look at it. Is it premature or everything is over? So the answer is, well, a cautious optimism, but for some economies, it is still a premature thing. Good thing is that Japan has come out of deflationary and mode after a long gap of time. So the Japanese economy is doing good. The England or the UK, that economy is doing relatively better than most of the European other European economies. So again, the answer will be somewhere in between. It's neither premature nor too optimistic.
Now, there was a lot of discussion surrounding emerging markets, especially with the recent plunge in the Argentine peso, almost representing the economic stresses facing Latin America and other emerging markets. Could you discuss why emerging markets are feeling a lot of pressure at the moment? Is it solely down to the Fed tapering?
The emerging markets, if we look, the Latin America is a different case altogether, because most of the debt which Latin American sovereigns are having, they are in the form of US dollar debt, and any change in policy of US Fed has a direct bearing on these Latin American economies. So if, for example, if Fed decides to increase interest rate, that will lead to the debt crisis in the Latin America. On the contrary, if the US decides to ease interest rate, then that will be beneficial for Latin American economies. Coming to the other emerging markets, say for example India. What happened is post 98, there was a lot of easy money which was floating around the world. So what it has done, it has started chasing one asset class to another asset class, one country to another country, and the countries where they got the more return was the emerging markets. So a lot of money flown into these emerging markets, be it India, be it Brazil, be it the other emerging markets. Now, once the tapering off started, or the talk about tapering off started, the economies which were hit or which were affected very adversely or sharply were those economies which had high twin deficit, both high current account and high fiscal deficit. So if you look at what has happened between announcement of tapering of QE until August 2013, the Brazil and the Indian rupee, and they depreciated a lot. So in a way, one can say the one of the problem with emerging markets where the capital inflows are coming in the form of, say, for example, India, the volatile portfolio inflows, and these volatile portfolio inflows can reverse the direction of flow. So the inflow today, and due to certain announcement or certain policy changes in the US or in India, they may the outflow can take place at a very short notice. So in Indian case, it has happened because India was having a high current account, it was having a high fiscal deficit, and the financing of current account was mainly because of mainly from the high volatile capital inflows in the form of portfolio investment. And once Fed tapering of talk started, the capital flight took place, and the Indian currency depreciated roughly around 20% in 7 or 8 months of 2013. So yes, QE tapering of talks have the biggest impact on the way the emerging market currencies have performed, and in turn, because the stock market performance being closely related to how the capital inflows or the portfolio investments are taking place, so the markets, capital markets have also performed in the same way, and that has led to even fed into your debt markets, and we saw debt market and capital market collapsing, the prices falling rock bottom, yields rising. Once the talk about orderly tapering off started, then things came back to normal.
Thank you very much for joining me today, Dr. Pant. That's all we've got time for. Make sure you stay tuned to Dukascopy TV throughout the week, as we'll have plenty more exclusive interviews for you. Goodbye.